You're in the Business Insurance Zone with me, Steve Savant, national insurance columnist and financial color commentator. This week on The Biz, the Social Security series, the American Retirement System. And on today's show, the taxation of Social Security benefits with CPA and national financial columnist Ken Davis.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone. I'm Steve Savant, and you're in the Business Insurance Zone. We're broadcasting live to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest found. And with me, day 5, CLU, CHFC, CFP, and CPA, Ken Davis. Welcome to the show again,
Steven.
Ken, this has been a mind-blowing week for the Steve because usually I know what you're talking about and I usually have a good understanding. I am out in no man's land this week. Honestly, I have been blown away. This may be the only show that I have any intelligence on, the taxation of Social Security, which of course the government told us would never happen. And now not only a Social Security tax, but stuff that I'm playing with can also cause it to be taxed. So let's get into it. I mean, we have a lot to talk about. What happened here? I mean, I had a promise that they weren't going to tax it, and now they are. And not at some marginal tax bracket that we use for earned income. We're talking about whopper numbers, could be up to what? 85%?
Well, yeah.
What is that?
Well, and let's set the stage here a little bit. 1980, interestingly enough, it was during Ronald Reagan's administration that they actually increased Social Security taxes pretty dramatically at that time to shore up the Social Security system, because I think they were looking ahead and seeing the baby boom generation wasn't that far off. And so I understand what they were trying to do. And initially they said, okay, well, the rich people can afford it, so we're going to tax up to 50% of Social Security income. And they set thresholds that you had to reach before you were taxed. And at that time, it was a pretty reasonable number. I mean, these are pretty wealthy people. Mm-hmm. Unfortunately, what's happened is inflation has chipped off a little each year over those 22 years. And then they introduced 85% of your Social Security is taxable. So the result is that now the middle class are firmly paying this tax now. Now, I thought I had a good handle on this taxation thing, but what's interesting is when you start to look at, well, what happens if you work from 62 to 66, your full retirement age, is they can take basically half of your Social Security benefits away because you're working, okay? Mm-hmm. They got rid of the old one that once you turn 65, they're no longer taking back part of your, this isn't a tax, it's just a reduction of benefits of Social Security. But during all that time, through 62 to 66, 66 to 70, whatever it is, you are then paying additional Social Security taxes on your earnings. The fact is, if somebody's making enough income, it can get close to 100%.
What?
And so they said they're not going to take our Social Security away, but for what they deem to be the wealthy, and now a big chunk of the middle class, this is no longer a rich person's tax. This is a middle class tax all the way. And so it slowly but surely it's been eating away. I don't know that was by design or whether it just happened, but it's kind of insidious. People don't realize.
You don't think it was by design?
I don't know whether it is or not. I'm not going to point fingers.
Okay.
I'll let people choose to judge it however they want to.
Well, I don't want to judge because I don't want myself to be judged as well, like the good book says. However, Ken, by design, and now you're telling me Ronald Reagan had a piece of this pie?
Yeah.
Now, no wonder I went independent.
But he had a Democratic Congress at the time, so there you go.
I'm sure they really wrenched his arm to get that.
Well, I'm sure there was some sort of balance there and going on. Politics, you know how that is.
As you well know, we're giving away, one of our show giveaways today is we're doing a whole thing on Social Security that includes Medicare and Medicaid as well. But on page 36 of our 40-plus page document, we do this thing called the taxation of Social Security benefit. It's a 2-stage taxation. It's provisional income test to find out if your Social Security gets benefit. And I'm telling you, there are so many things to capture income here to make sure your Social Security gets taxed. And if you want to order it, again, just write me at thebiz@brokersalliance.com. We'll send you not only the whole manual, but in here, you should learn. I think everybody should learn this if you're an advisor. You should learn this page because this page is a great balance sheet item. And why do I bring that up? Because then when you do your 1040 overlay, which is all we're also giving away, this will make more math sense, especially for the tax advantage products that we sell.
Well, let me make a comment about that. What's interesting is, I'm an accountant, so I can say this. we're lovingly called bean counters because we look at history. Okay, we count the beans, we look at the history, we don't look forward. Your planners, your other kinds of planners tend to look forward, and there's some really good CPAs that are proactive. The thing about this 1040 kit is it takes a historical document of what happened last year, and you can actually put the overlay on it and look through it and say, on this line, if you have this, you can do it. For instance, if you're in retirement and you're collecting Social Security, you can simply look at line 20B, B as in boy, 20B on the front page of your return, and if there's a number there, you're being taxed on Social Security, and it'll tell you how much of your Social Security. One line, I think it's 20A, will tell you what your total Social Security is. B will tell you what is actually being taxed. And if your CPA or advisor has not told you there's some strategies to redeploy assets to reduce or eliminate taxation of security, if you got a number, I would say at least $3,000, $4,000, $5,000 in line 20B, it's worthwhile to either ask your current advisor to do this for you or to find out about it. And if they're just not interested or don't know it, you might even consider looking around for an advisor that knows how to do that.
Well, listen, after this whole week's show, if you're a consumer watching our show, and we have about 15 to 20% of our audience, even though it's really targeted for professionals, we have consumers watching this. If they're not talking about the things we're talking about, you should get a new advisor. Your Social Security, the average, now I'm not talking about the rich people, the average Social Security American is walking away from 14 grand over their lifetime.
Of additional retirement benefits under Social Security.
And to me, if they're not up to snuff on this, Ken, I'm sorry, I don't mean to be too brutal here, but advisors need to know about this. This is why we're doing our show. We're giving away the 1040 overlay. That's huge. Our entire Social Security manual, that's huge. And inside on page 36 is our provisional income test. Believe you me, once I learned this, I understood how to make my products that are tax advantaged work. We come back from the break, we're going to address the strategies that can increase your retirement cash flow and money you can keep. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance as a retirement income plan.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Welcome to the Brokers Alliance Workshop. I'm Jessica Lopez, and that's Steve Savant. What are you doing?
I'm collecting all our table shaving manuals for substandard cases for the impaired risk season.
Steve means companies who take off 3 to 4 tables using lifestyle credits.
But most companies just take a little bit off the top with a planer. But in our workshop, we cut the legs out from under the table to deliver the best offer.
If your case has been rated, we'll show you how table shaving with the right company can deliver the best offer.
Now that's a table shave. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Ken Davis. Remember, you can order today's giveaways at thebiz at brokersalliance.com. The 1040 overlay that we've been talking about, the provisional income test, which is on page 32 of our Social Security manual that includes Medicare and Medicaid. You can order it all that at the biz at brokersalliance.com. And just a heads up, before moving forward with any of the ideas you hear on our show, always consult your tax advisor and broker-dealer compliance officer. And remember, it's Breast Cancer Awareness Month. So keep in mind that we're already setting aside substandard cases such as breast cancer for the impaired risk season coming up right after Halloween. Now we're talking about strategies that can increase your retirement cash flow. And one of my strategies is I don't want to pay any more taxes than I have to pay. Now, Ken, during the break, and you remember 90% of Ken's genius happens during the commercial. So he brought up this thing that I want to talk about, and that is treating Social Security like an asset. Because really, I don't think we think in those terms. So give me a little idea, because I thought that was a great piece.
You know, $20,000 a year is a substantial sum of money, but some people think, oh, it's a relatively small amount. But think about how much you'd have to have in a decent investment portfolio to generate $20,000 a year.
Especially with this low interest
rate.
Right.
I mean, 5% almost sounds absurd when CD rates are 1%. But let's say with a diversified portfolio over a longer period and the economy improves and stuff, and you actually get your 5%. If you're able to get that, $400,000 of assets at 5% is 20 grand a year. Mm-hmm. If you say, well, gee, I think that number's too high, I don't think we're ever going to see those kinds of returns again, and you want to use a 2% number, well, 2% of $1 million is 20 grand a year. Mm-hmm. So is the Social Security benefit valuable? You bet it is. And do you want to use these rules to maximize your benefits? Congress put them into place. They want you to have them. They said you paid your Social Security taxes. You're due them. Find out, get with somebody that knows how to use the rules to your benefit so you maximize your benefits.
I just had an economic epiphany of premium proportions while you were talking. I'm serious. If you took an SPIA today and said, I need 20K, I want to know what my guaranteed single premium immediate annuity for my life, by the way.
Yeah.
I want to know what that number is and what
Yeah.
that lump sum is. And believe you me, since we're not paying big numbers because of the low interest rate environment, even that number is going to be colossal. So when you think about it, you need to start thinking of Social Security like my asset, even based on 1% in the CD market, might be worth $300,000-$400,000 lump sum.
Okay, now
I mean,
look.
I can just see it now. I'm so sorry, Ken. I can just see it now. You know, J.G. Wentworth is going to go ahead and say, I tell you what, I'll buy your Social Security for a lump sum. I mean, I can just see now a whole new secondary market for Social Security benefits.
Yeah, I don't know that you can sell your Social Security benefit, but
Oh,
if they
there's-
could, they would.
If it's personal property, it could happen. So I don't know. Go ahead. I'm sorry. I didn't
All
mean
right,
to get off
well,
on
you know, so the first thing is maximize the income. The next step is, now that you've got it, the government turns around and says, hey, if you're making too much money, and I'm talking middle class now, folks, if you're making too much money, we're going to start taxing it. First at 50% of Social Security, that's not the tax rate, that's the portion that's taxable.
Portion's taxable, right.
85% of it's taxable. And then if you are making even more, you can get into as much as $3,000 a year in additional Medicare premiums because your taxable income, your adjusted gross income, is too high. And then if you're one of the unfortunate people that have to continue to work and really can't retire, and you're drawing your Social Security benefits, you're going to have reductions of Social Security benefit between 62 and 66, and then taxation through 62 through 70 of any wages that you make. When you add it all up, they're taking a big chunk of this back. And so they've told us they're not going to take our Social Security away. They're not going to touch this third rail. We've heard that over and over again. They're already doing it. These laws are in place. They're taking this money back through tax laws, through taxation, through higher Medicare premiums. This is all happening, and it's in place today.
Well, it makes me not want to work. I guess maybe I'll cross over to the socialist side and become part of the nanny nation. I mean, I'm just saying they're just penalizing you every which way you go, right? Well, I'm looking at
Planning's important. The point
It
is,
is.
we can manage these things. We
Right.
can reduce the effects of all of us. Increase the income, reduce the taxes, reduce Medicare premiums, and we may have to throw in some other tactics along with this, including Roth IRA conversions.
There is so much on the table right now, and that's why if your advisor is not bringing this to you, you really need to start talking about this and bringing it to their attention. And if you're an advisor out there watching our show today, this is another, I hate to say it because I don't want to be too dramatic here, but this could be a career maker. I mean, this could be part of your core competency in your practice that could really build out your business. I mean, Ken is a perfect example of this, not only being a CPA, but he's been a certified financial planner, and he's already gone down this road. I'm telling you, the baby boomer nation, and I am the president by my own anointing. I anointed myself, right? I have appointed myself as the president of the ARP nation, right? The baby boomer nation, we don't know this. I've been in this game for 30 years, and I did not know some of the nuances that Ken was talking about, and not to mention the strategies and tactics that can put more money in your client's pocket. You're going to need that money, spendable cash, take-home money, and that's why I think it's so important for us to talk about this.
Well, I can tell you something, Steve. You know, I'm a quick learner. I pick stuff quickly. These rules are so complex. I went out and bought a 400-page book on Social Security, Medicare, dependence benefits, disability benefits, this whole thing. The Social Security system isn't just retirement benefits. It's got all this stuff out there. And if you think it's a retirement benefit, you're wrong. This is a social welfare benefit. It is a tax and give it to other people. And it's not what people think. They've been sold a bill of goods, and this is for sure. This is
400
fact.
pages?
400 pages.
And Ken read it over one weekend.
No,
Unbelievable.
I keep referring back to it. It's difficult stuff.
Wow, I mean, we're talking about the encyclopedia of minutia for a CPA. No wonder they guys call you bean counters and number crunchers. The anal retentive are among us. Well, remember, you can watch this show and all our shows by clicking the red on-demand video button right on our homepage at brokersalliance.com. Well, that's the Buzz on the Biz for today. You've been in the zone, the business insurance zone.
The Biz is brought to you by Brokers Alliance, a national leader in insurance products, support services, and educational workshops. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.